Hey everybody, welcome back. Well, we have a lot to go over. There are a couple things here that are becoming concerning, and obviously things look really good, so it's hard to look at this and say that, oh, are we having issues? Internally, we're having a little bit, but I think we have a little bit of fight or flight with what we have coming up with CPI, PPI. Powell spoke today. We have to go through that, and we have some big data coming up. Let's start there. Now, we have some uncertainty with Taiwan Semi right here coming out with their monthly sales numbers. Their monthly sales numbers can actually move semiconductors more than the earnings call, because this shows where their monthly sales are coming from and which nanometer. There's some pretty decent detail in there. So we can see semis move up or down pretty viciously tomorrow. This comes out, if you are on New York time, this will be out 1:30 in the morning. So you see it hit Asia markets. We'll see that around 4 a.m. And then, of course, we'll see it when the market opens. But this is a big deal. And, of course, we know all the other economic data that's coming out. But, again, to me, this is a much bigger deal overall for semiconductors than what we see for Taiwan Semi. We had Powell speak today, and there are a couple key things. I thought he was going to be a little more aggressive. I won't say hawkish, but just keep his stance pretty status quo. And there's some really key lines in here that we should look at because it's going to affect stocks. But these were really the headlines. More good inflation data is necessary. Commercially, property is going to have an issue. We need to stay like we did in the 70s. So to start, I think that this is a really good place. More good inflation data is expected. So what he wants to see before he even thinks about it is much better data or expected labor weakness and rate cuts. And I think that this is really important. We had a lot of good inflation data over the last 7 months of the year. And they did, to an extent. In the beginning, if you look at January, February, and March, we actually did go higher on CPI, but then it did start to drop. But Powell said Tuesday when we had a bump in inflation the first quarter, now we've had one good and one very good inflation reading. We need more data so we can be confident. They're not going to settle for one, guys. They're not going to settle for two. They're going to settle for quarter over quarter. That's what they're looking for here. Now, I know that this is not the obviously sexiest topic to start with, but I'm going through it for a reason. We have to understand what's coming, not where we were, but we have to understand where we're going. If we can think like this, we have an edge. And so understand when I go over this why I'm doing it. An independent Fed means better economy. It's literally essential. So Powell was under a tremendous amount of pressure. And he was under a tremendous amount of pressure to cut rates, because if you cut rates, people have ease. If they have ease, they're in a better position. That better position allows them to buy more goods and feel better. The incumbent, whether it's Democrat or Republican, always want rate cuts. They'll deal with it down the line in a year, but they want rate cuts now. So you always see things like this that start to happen. Now, what Powell's stating here, and it's really important, it's literally essential. We all know that it's essential, but he's getting pushback on cutting rates, where you're going to get people saying about the report that if reelected, Trump would seek to exert more control over the Fed. They always, either, it doesn't matter what side you're on, they always say this. It doesn't matter. And he just said the independence of the Fed for the second time during his semi-annual testimony before the banking committee. They always state this, and it's always each side saying the other is going to exert influence. It is what it is. It's the game. This is really important because the way that he's saying this, it's a read between the lines from the way that I look at it. And it's basically saying, I'm not doing anything with rates. And you'll see that the market actually responded to this. This was significant as well. Commercial property will likely be depressed for years. He must have been pressed on this because usually he wouldn't say something like this, but he will say it will remain stressed for some time. It's a risk that has been with us. We will be for us for some time, probably for years. And banks need to be honestly assessing what their risk is. They need to be assured that they have capital and liquidity and the systems in place to manage that risk. We just had the bank tests and they came out okay. But what he's basically saying here is that this is going to be status quo. If you're looking at depressed rates, which we are seeing, you are seeing REITs hold their own here. They're not falling apart anymore. So if this is depressed, what's going to happen when they start to go flatline or start to go up? I actually take this as a really good sign for REITs. Now, that might be a contrarian view. I'm okay with it. But as long as they're depressed, we're fine. If we're depressed here and then we kind of flatline or go down, that's okay. What we don't want is the free fall. And I believe we already seen the free fall. I think most banks know where their problems are going to be. And there's so much private money out there looking for yield to bail these guys out that a deal will get done. I've seen them. We've all seen them. And we can go through a couple of those in a second here. But lesson from the 70s is that the Fed needs to stick with it until inflation is beaten. Very important. So he described his experience, the senator, Republican from North Carolina, describing entering the workforce in the 70s. Now, what happened was, we have it under control. And so what do? They ease off the gas, they start cutting, and then they have to bring Volcker in, and Volcker just starts laying down the hammer. And then from 1980 to 84, the market was actually really good, but you don't want to step off the gas. And so what he's saying here is they're not doing anything until they need to. Now, this is one area that I think is really misguided. And we're seeing that in the pricing of the properties. So housing activity is pressured by higher rates. This is true. I actually would argue that higher rates are pressuring housing prices down more than anything else, more than commercial real estate right now. Because people are looking at those rates and saying, I'm just going to rent. And what you have is you have a lot of homes right now that are out there, and you don't have a lot of buyers anymore. And they're still building more homes if you look at it. So you're starting to see the disparity. And what this means for us is this presents opportunity to me in actually shorting some of these home builders when they rally, because they're trading 2 times book value. But he's very specific here. We have significant housing issues in the country. We've had them before the pandemic. But before the pandemic, you needed housing. Then we run into the pricing pressure. Monetary policy works through interest rate sensitive spending. There's no more interest rate sensitive spending than buying a house and having a mortgage. It's having an effect on the economic activity in the housing sector. Now, I thought this was super interesting as well. So this is September, the chances of a rate cut. And what we can see here is that nothing came out today, nothing at all. And if you just look at this, you can actually see up here that there's no change in rates. Chances of easing were 73.3%. What they do is they take these two and they add them together. But we went from 24.4 to 26.7 just because he spoke. Because people basically came out and said, oh, he's not going to do anything. And I think that's just an important distinction where they're already settling in and saying, you know what, there's a 70% chance of a rate cut. But just him speaking alone dropped this, the probability of a rate cut by 1%. It's not a lot, but I do think it's significant. Now, technically, there's a couple things going on here I'm just going to point out. And I do want to get into the breadth a little bit here, but we're having these breakouts, 3 o'clock, end of the day on the hourly, on the futures, and then we're not going anywhere. And then you're coming in the morning, and then we're seeing these pushes, and then we're stopping, breakdown, not going anywhere, again, breakout over an hour, and then we're not going anywhere. So we're getting the majority of these moves in the first hour, right? Usually it's the first hour. This was after hours. But if you look at this, we're getting some kind of weird slope associated with it. And it's starting to become a concern of mine because we're kind of up here. So I'm not saying it's not something where you're not having this, right? You're still going up, but you can kind of see how we're starting to slope over, right? And this becomes a little bit of a concern as you start to slope here because you are up, and that puts you at risk with CPI and PPI coming out. And we're going to have to go over that a little bit before it comes out. And I'll tell you what I'm watching, and we'll get more into it later in the week. But I do want to show you what I'm going to be paying attention to. So what do I see here? I see an issue with some of these levels. For example, like right here, you're just unable to get above it, and then you're trying to hold some of these other levels. I'm going to use this other drawing tool because it'll really highlight it. So if we just drop the level right here, you'll see it's pretty glaring right there, obviously. And then here as well, you're getting through the retest, but then you're not going anywhere, and then you just faded from one on. You get wicks and you're not breaking down, but you're not going anywhere. If we just looked at this on a 4-hour, and what you'll see, oh, we had a doji and then we broke the doji. Okay, that's definitely something to pay attention to. And we could look at it this way too. And this was the other way that I was kind of studying it and just saying, okay, well, if we were to look for a trend line, and we just dropped a trend line right here, did we really break? No. All right, well, how about this one? If we use the tighter trend line, did we break? Well, yeah, we kind of broke this tighter trend line, didn't we? Okay, so we broke the tighter one, but that worst case takes you to here. Are we going to break this? I don't know. I don't have a clue yet. And it's very hard to look at a market like this. I'll clean all this off. It's very hard to look at this market and just say, oh, we're just going to roll, right? But there are deciding factors that I look at, and I'll just show you what one of them is for me. Now, if I'm to look at these bars, everyone would say, well, they're green, but there's differentiations of green, and this is really important. It is to me, so I'm going to make it kind of a little bit of a lesson here so you can understand where my head is. So if I have a green bar like this and I break out, right, I have a wick to the bottom, and that wick is what? The wicks are price rejection. Then I just get a little bit of a close and an open, and then I'm like, oh, okay, well, this is nice. because I have a wick up here, I have a wick up here, and then what does this bar do? This bar completely opens here, encapsulates that wick, and all that price rejection has gone away and it's eaten. The following day is smaller, and we do have a little bit of a wick up here. And what we would always do with these bars, and what we find helpful, is we just measure those bars by 50% and want to see were buyers or sellers in control at the end of the day. And then we would say, well, we were still up 50% on the day, so it's a net positive. Even though it's green, people are just going to assume it's positive. That's not accurate. And then you would see here and how this ate up. I mean, it's better than a stick in the eye, but it's not, that accurate. Brings you into today. And the first thing that you'll notice is, yes, we did encapsulate some of this wick. Did you encapsulate all of it? No, you did not. You did not encapsulate all of it. Are you up over 50% on this particular bar? And if you dropped from here and you moved up to the top of that wick right there, you're going to see that no, you're nowhere near. As a matter of fact, let's clean this off and make that super clean because you can actually see it much better from here and how off it is. So no, you're not. So actually at the end of the day, the sellers were in control and you can see this. Now, if we look at that and go, okay, well, what about NQ? At the end of the world? I don't think that's the end of the world. No, I think it's just a very simple, you have a very simple doji there. But the devil's in the details. And what do I mean by that? So to me, this was an awful closing. And I pointed that out in our community. So if you're in the community and you're asking, what do I mean by that? I gave some examples in there, but I'm going to get into it a little bit more. Here's the 9th. And I want to show you what's starting to happen. We're starting to see a little bit of a rotation. So here's KWEB, the Chinese names. They're buying what? Biotech and solars and consumer discretionary. And then here's the NASDAQ. For the past 2 days, you were better off buying the NASDAQ than you were buying anything else. Better than buying the stocks. Better than buying the leading names in cloud, IGV. That's an issue because you don't have leadership. See, solar is not going to be leadership. Biotech, maybe. But why are these two names up? Well, they're up because Powell's basically saying we're not going to cut rates, but we're not going to raise them either. So these two are finding a happy medium, right? Based upon an interest rate sensitive play. It's actually why you're seeing retail up as much as well, right? So these names are moving based upon a retail probability. And you can actually see, if you take a look from the 9th, you can actually see when these names start to move and break out. It's very specific. It's very clear as to why these names start to move. But where's my leadership? Well, the SOX is leading the NASDAQ. Is it? Because it looks to me like the NASDAQ is leading the SOX. Now, Taiwan Semi's numbers can change that. But for how long are they going to change that? Are they going to change it for a day? Are they going to change it for a week? I don't have an answer to that. I would tell you that you still don't have buybacks out there, and institutions don't look to be in a hurry going into CPI and PPI. We just seem somewhat heavy today, and I'll give you some more examples of this, but whenever I have something like the NASDAQ sitting here, and I don't have any real leadership above me for the past 2 days, it's an issue. Now, this is something else I started noticing, and it's just starting to develop, and we should keep our eye on this. Here's Argentina. Now, Argentina's been up 5 of the last 5 days after coming down a lot, but you now have an issue in France that seems to be resolved. So we're not really hitting those lows anymore. So more money is pouring into there and more money is pouring overseas. And we're starting to see that, right? Names like Race are going back up. They're bouncing off their key levels and they're rallying. So we're seeing money go into there. Okay, how about Japan? Is there any money going to Japan? Yes, Japan's moving and Japan continues to move. How about Mexico? Yes, money's moving into Mexico again. So we were the only game in town with all this political uncertainty. So all of a sudden, we're no longer the only game in town. Mexico's starting to stable. We're starting to see people put money back into Japan. People are starting to buy Argentina. And I can run through the litany, but we're not going to make this the entire world index tour this evening. But what you're starting to see is money start to go into these other categories. So we don't have leadership and money starting to move globally instead of domestically, and we don't have buybacks for the next 4 weeks. We're going into CPI and we're going into PPI. Okay, let's address that for a moment. Now, without getting into the numbers, the one thing that I always look at with CPI to get an understanding of where we are is I always want to look at where is crude oil. So crude oil from May, from here to that month, we were basically down. And we saw that reflective in the CPI number. Well, if we use this line and we mark it off from here, you'll actually see that crude oil is up month over month. So everything is crude oil. Everything, no matter what you have there, the cost, the transportation, everything is crude oil. And people would say, well, it could also be gas in the refining. So I always want to look at gas as well. And I use this as a goal post. And I'll do more on this tomorrow night. But I want you to understand this ahead of time. Here's June. So gas for the month of June is up a lot. And so your costs, your transportation, your food, the Uber bills, food at home, food away, all of that stuff, all those numbers are going to be up. Now, 33% of CPI is housing and rents. So people are going to say, well, that's not going to translate to this. Maybe, maybe not. All I can tell you is that whenever I have disparities like this, that number usually comes in a little bit worse than people think it's supposed to. Now, we could see the car prices come down because car prices are absolutely plummeting, and we've looked at that before. But is that going to be enough? And I don't know, the answer is yes. So if we go and take a look here, and I'll show you a couple things. So here's the stocks, and we can all see that we're back to those highs, and we've reversed right up here again. And so what we would do is look at this and go, okay, is there something here that we want to pay attention to? So if I look at the histogram, just the histogram itself, I'm still in decent shape on the histogram. If I go and take a look at the RSI for a second and say, okay, well, what about the RSI? Well, I'm getting to that level and I'm kind of rejecting. Not totally, but I'm kind of rejecting. Now, we could just say, well, they're trying to take money out of semis ahead of Taiwan semi tonight. And that's just prudent. You know, Morgan Stanley said it's going to be good. JP Morgan said it's going to be good. That's great. And what if it is? Is that going to be a blow off tomorrow? And then we blow it off and then they sell into it. And that's a little bit of my concern here, because when I start looking for, well, where did they put the money today? Well, they got out of cloud. They couldn't dump cloud fast enough today. If you look at IGV, when IGV rallied, we got right to the top again and we rejected. And you had the inside bar and you could have done anything you wanted and you rejected. You broke the 70 and you rejected. I can say anything I want about my cup and handle, and I will, because it's a beautiful cup and handle, but I rejected. Now, does that mean I'm going to reject all week? I don't have an answer to that. I can only tell you what's happened. We rejected right here. And there's a couple other names that have rejected as well. And one in particular I thought would definitely push, but didn't just yet, but that's okay. The important thing is that you're still aware of the skew, and I read everybody's comments, so people know that they're going to be dealing with volatility. Selling down does not mean crash, guys. Okay? It just means that we sold down, and it presents opportunity. And this is really important for people to get, and they're not getting it. So like take NVIDIA, for example. Did I break the 50 on the RSI? No. Am I oversold? No. Do I have to worry? No, not yet. I mean, like if we really look at NVIDIA here versus here, oh my gosh, I'm down a whopping $10. Wow, it's horrifying, isn't it? And what we really need to focus, if you take a look at this peak to here, what are you really down? 16%, okay. So you've had a swing. I think the intraday traders, what they're missing, and this is really why I keep hammering the skew, specifically because of stuff like this, because I'm constantly asked, what do you do during the day? If you're in this and you're swing trading, if you're in this and swing trading, you have to be willing to actually do what it's called. There's a reason it's called a swing trade. It's because it swings. It doesn't mean that it's just going to go your direction every single day. See, what people got used to is that, Fed's just going to step in and buy everything, and things are, once they break out, they're just going to go higher, right? That's why everybody that did exceptionally well in 2020 or 2021, they struggle now, and they can't figure out for the life of them why they're struggling. You can draw these DTLs all day long and stuff like that, but really where you're going to see the money is on the pullbacks and understanding these levels. So I always tend to look at these levels, and then they become places of opportunity. And if you're going to trade, then trade. If you're not going to trade, then don't trade. And I know that sounds really, really silly, but when you have stuff like this, it presents enormous opportunity. You have demarcation lines. You should have all these drawn from the night before. And this presents opportunity. I was in and out of this name 3-4 times today. The other one as well, what was the other one that we were doing over and over again, was Tesla. And there was setup after setup. It's really important to get this here. So when I talk about these setups and we do them in the community, it's really important for me to show them so you can actually see the timestamps of what I'm actually saying. So I'm just going to blow this up really quickly and then we'll walk through it. But I'm saying this is exactly where I bought it, and you'll see the timestamp. trimmed up $1 and I'm moving it up. Once I made money, I roll it in the calls. I'll explain why I rolled this in the calls. I can do a whole video on how I did this. Excuse the typos. I actually apologize for the typos in there. I was just between trading and typing this all out. But there's a reason why I did this, Taiwan Semi, but there's a reason why I did it with this and the stock. And then as it goes up, I'm pulling money out and I'm reducing my risk, right? Now, that said, and this is a day trade, but you can do this with if you're swinging it too. But if you're swinging it, you're going to have to expect swings. I mean, there's a reason it's called that, guys. I'm really trying to hammer that point home. But this undercut right here, and then all you're really doing with this kind of thing is you're just looking for any kind of demarcation. So do I get my divergence here? No, but I get on a 1 minute chart, I break a 17 on a 1 minute chart. RSI cannot go to 0. It can theoretically, but it's not going to. And so when you're under here and then you start to lift back through, I did a whole video on this. I'll do another one. But once you flip, that's it. Same thing with here. You can only go so high. So when you have something like this and we start selling down, actually into this bar, I already knew because that bar is less than what? 50%, right? You know how we measure these bars off? Actually, I will do a video on this one. But you know, I think it's worth doing a video on this. If you want to see it, just comment below and I'll do it. And please check your emails tonight if you are all on the wait list to get in the community because a bunch did go out. Now, if you look at this, you have that 50%. There's your doji. Flip the doji. Boom. It's on. That's it. And then all I'm doing is using that as the stop. I waited all day for things like this. Okay, you can see in that comment, I say patience pays. It does. I don't need this. I don't need to be up here and be cheering. We already had a day trade on it, which we did very nicely on. And this is the kind of market. So this is actually John paraphrasing what we did early this morning. And you can see even this morning around 9:38, what we're doing, I'm rallying it up, I'm buying. It broke VWAP. As soon as it broke VWAP, boom, I sold half for a loss. And then I think it was a loss, small loss. And then I added it back when it flipped it again, the other half. And then I started trimming into it. And then when it set up again at 10:10, we went long. And then we just started trimming like right into these rips, just pulling money out left and right. And then it told us that it was over. Apple was another one. And this kind of volatility on these kinds of skews, you can trade this because you have to understand that this is the new normal. But when you're seeing these kinds of swings, you have to understand you're going to rotate. That's the first thing. The other thing is, this is not going to last. Like you can't assume that you're not going to have a counter move to something like this, right? You have to realize that it's out there. You just don't know when it's coming. You know that it's not sustainable for RSI to stay above 80. We all know that, right? It doesn't mean you're going to collapse, but it has to work it off. So in other words, when you're up here at 220 and everyone's like high-fiving their bros, what happens? 207, right? And then you go to something like 207, and then what do? From there? Okay, it pulls itself back, and then it rallies up again. This is a really important distinction, guys, because if you can catch this and say to yourself, I understand that it doesn't mean it's going to fall and go to 0, but I understand that this is not optimal. It allows you to do things like this, like I just showed you. There was twice on this trade, right in here, which I showed yesterday or the day before, and then again right here, which I believe was today, which both presented an opportunity for us to say, hey, you have a high RSI here. So these pullbacks are going to be normal, and we're going to look for opportunity and we're going to buy. We bought calls here in stock. We bought calls here in stock. It trades up, we're getting out, right? Over, wash, rinse, repeat. That's fine. And that's the short-term side of this. Here's the long-term side of this if you were to look at this. This is not sustainable for this to keep doing this without a pullback. Say it with me. It doesn't mean the market's not going to collapse. It just means that for you to test 220 is not that big of a deal. And the question you have to ask yourself, are you going to be willing to deal with that? For example, like one of the key things for me, and this might be a rule that you might want to consider in these kinds of environments when I'm in a hot market, which I will refer to this as a hot market. If I'm down in anything at the end of the day that does not have a catalyst, I close it. So if I mark this off here, and that's my demarcation line, and let's say I'm over this and I'm not up and I don't have a catalyst, I need to get out. As much as I look at something like a Tesla, and I will say that this looks great. I mean, historically, this is a multi-year level that you just broke, and you broke that DTL. And from that break on that DTL, you've never looked back. I mean, it's 30 points, and you're even hitting higher highs. But this is your first higher high. And you go to this on a weekly, and you look at it, just because it's prettier that way. Remember, we showed this about a month ago and said you have an inverted, right? It's actually an inverted head and shoulders, left shoulder, head, right shoulder. You've broken your neckline, which is great. This is your first real hurdle that you have to get through. And you stopped and rejected. So if you're down in that, let's say you're in a 265 to change, you close, you come in the next day and you start all over again. My concern with this market is that people are going to lull themselves into a false sense of security. And if I start to look at this stuff, I'll give you an example of what I mean by this. I think that this can push, and I do think it can go higher. And I know you're coming into earnings. But when you start to look at stuff where you have like a 94 or 95 4-hour RSI, and you realize that every single time that you've ever seen anything like this, and this is what I would do. I'd go back historically and look at these particular periods of time and say, okay, well, when was this ever and what happened? How did this end? Did this end with everybody high-fiving their bros, or did it end in tears? And what you'll see is every single one of these peaks, when it rolls, not right now, but when it rolls, it ends in tears. So you're always looking at the past to get a sense of what happens for the future, or probability, right? You get that. That doesn't mean it's going to happen tomorrow, but it does mean that you have to have one foot out the door. That's it.